Okay, let's jump right in. Welcome to the Explainer. Today, we're unpacking a brand new financial ecosystem that literally defies every single traditional label you might try to slap on it. It's called KAELUM, and according to the definitive guide we're analyzing today, it sits in that very rare, very specific sweet spot. It's a category so new that it's completely misunderstood by the masses, but absolutely undeniable to the few who are paying close attention. It's an architecture that is quietly rewriting what a fintech unicorn even looks like. So we're going to break down exactly how it works using the brilliant framework laid out right in our source material. Here's our roadmap for this explainer. 1. Defining the undefinable. 2. The inverted economy. 3. The 20-agent brain. 4. The category distinction. 5. The regulatory moats. And finally, 6. The unicorn question. Let's get to it. Section 1. Defining the undefinable. What KAELUM is not.
All right, to truly wrap our heads around what this platform actually is, we first have to wipe the slate clean. We have to unlearn what we know about digital finance. When you hear digital currency, I bet your brain immediately jumps to a few familiar buckets, right? But KAELUM actively tells us it is not crypto, it is not a loyalty scheme, it is not a payment processor, and it's definitely not a neobank. Every single time someone tries to map this to something familiar, they get it wrong. It's creating an entirely new category, which is incredibly hard to do, but as we'll see, incredibly lucrative if you can actually pull it off.
So what is the whole shebang? Well, here is the canonical definition straight from the founder. KAELUM is the world's first AI-powered, non-crypto, closed-loop digital commerce currency. Now, what's really fascinating about this exact phrasing is that every single word here is doing heavy lifting. AI-powered means an active AI engine is literally running the transactions, not just some static rulebook. Non-crypto means it completely bypasses all the speculative chaos and regulatory heavy lifting of the blockchain. And closed loop, well, that is the absolute secret sauce we'll be exploring in just a minute. To really illustrate the commerce part of that definition, the native currency, known as KAELUM, operates with a hard floor price of 9 pence. It is strictly designed for productive commerce. You buy it at 9 pence and you spend it at participating merchants. That's it. It's not traded on exchanges, it's not subject to massive speculative swings. It exists to facilitate actual trade, pure and simple. Section 2, the inverted economy, flipping the payment script. This leads us right into an entirely new economic model that completely flips the traditional payment processor script on its head. Walk through these mechanics with me for a second. When you, the customer, spend KAELUM, you pay a 4.5% platform fee. Now, you might be thinking, hold on, why on earth would I ever pay a fee to spend my own money? Well, here is the genius part. Every time a customer spends KAELUM, they receive a guaranteed minimum 6% discount from the merchant. So even after paying that 4.5% fee, you walk away with a net positive saving on your purchase. You literally win from the very first transaction. But wait, what does this mean for the merchant? 0%. Merchants pay absolutely 0% transaction fees on inbound KAELUM payments. Let that sink in for a second. Instead of paying a fixed processing tax to a payment rail on every single swipe, whether that specific transaction is profitable or not, the merchant pays nothing to receive the funds. Their only cost is that minimum 6% discount they give the customer, which they completely control and use as a marketing and customer acquisition tool. They only pay a 4.5% fee if and when they decide to cash that KAELUM out into fiat currency at the end of the month. It's just a categorically different deal. Section 3, the 20-agent brain, the KAT engine. Now, this inverted economic model isn't run by a massive back-office team of humans. When most fintechs say they are AI-powered, let's be real, they usually mean they bolted a basic chatbot onto their help page, or maybe they use a machine learning algorithm for fraud scoring. KAELUM means something entirely different. They are running a live, autonomous fleet of 20 specialized AI agents, and they run exclusively on Anthropic's Claude models. This is a deliberate, massive architectural choice. They use a 3-tier system. Haiku 4.5 handles the high-volume, real-time tasks like notifications. Sonnet 4.6 handles complex analysis like merchant support and deep transaction insights. And at the very top, Opus 4.7 handles the absolute highest consequence governance, things like legal reasoning, compliance, and cybersecurity. There is no other digital commerce currency out there operating an AI fleet at this scope entirely on a single frontier AI provider. Section 4, the category distinction, breaking from the pack. To really grasp why this category distinction matters so much, we need to contrast it directly with the payment giants you're used to. When you hear about a new payment platform, your first instinct is to map it to Stripe or AirWallex. But those are open-loop processors. They move fiat money from one account to another and extract a fixed fee from the merchant on the way through. KAELUM is closed-loop. Remember, they don't charge merchants a dime to accept a payment. The economic relationship is totally inverted. The merchant controls their customer acquisition cost via that 6% discount rather than suffering a mandatory tax on every single swipe. KAELUM isn't trying to build better rails on the old system, it's building a totally separate railway.
Section 5. The Regulatory Moat. Closed-loop Advantage. Let's talk about the strategic brilliance of how they've actually protected this new railway. One single architectural decision saves them literally years of legal battles. Under the UK Electronic Money Regulations of 2011 and similar EU directives, KAELUM operates under a closed-loop exemption. Why? Because everyday customers cannot withdraw KAELUM back into fiat cash. Only participating merchants and creators can redeem it for fiat at settlement. Because of that specific restriction, KAELUM completely bypasses the massive, expensive hurdles of requiring an FCA e-money license. It completely sidesteps heavy crypto regulations like MiCA or CARV, frameworks that typically bog down digital assets with immense compliance burdens. They aren't out there fighting regulators, they've simply designed a system that structurally avoids the battlefield entirely. That is a moat you simply cannot buy.
And this is all happening against a super fascinating macro backdrop in the broader European payment landscape. Right now, US-headquartered Visa and MasterCard control roughly 65% of all Eurozone card transactions. European leaders are urgently calling for local infrastructure. But the institutional answer, a system called Wero, won't even have merchant payment functionality ready until 2027. KAELUM is live today. While institutions are promising solutions years down the line, KAELUM is actively answering the call for European payment sovereignty right now. That timing gap is an enormous strategic window.
Section 6. The Unicorn Question. Growth and Market Potential. So does this undefinable platform have the actual numbers to back up the hype? Well, their gross transaction value, or GTV, targets scale aggressively. GTV is basically the total volume of money flowing through the platform. Year 1 targets £40 million, Year 2 takes a massive jump to £250 million, and by Year 3, they project £750 million flowing through the ecosystem. Now, the source document insists these aren't just napkin numbers. They are built on a highly structured business model. The reason they are so confident in these targets is because of their revenue architecture. Most startups launch with maybe 1 or 2 ways to make money, right? KAELUM launched with 7 interlocking revenue streams. Yes, they have the 4.5% customer transaction and merchant redemption fees, but they also generate revenue from verified subscription tiers, NFT marketplace commissions, fees for massive brands creating subtokens, closed-loop domain registrations, treasury yields on the redemption float, and even licensing out their Kate AI engine to third parties. They aren't just a single product, they are a highly diversified economic ecosystem. Which brings us to a very provocative thought from our source material. Is KAELUM the next European fintech unicorn? History shows us that massive valuations, think Revolut or Klarna, they don't come from just building a slightly better product. They come from defining and owning an entirely new category. Right now, KAELUM is the sole serious entrant in the AI-powered closed-loop commerce currency space. They have a live 20-agent AI brain, a brilliant regulatory moat, and an economic model that guarantees customer savings while eliminating inbound merchant fees. The author challenges us with this. Nobody waits for category-defining infrastructure to be obvious, because by the time it's obvious, the category's already owned. So take a look at the landscape and ask yourself, where will this be in 18 months? The answer just might be on the front page of the Financial Times. Thanks so much for joining me on this explainer, and I will catch you on the next one.